Let's get on to the dream bus and see how VYM can compound your wealth and cash flow using my favorite dividend reinvestment calculator. Of course, depending on the amount you have and how the future market develops, it might turn out to be a pretty realistic picture of the trajectory of your investments. This is why I always like to use this calculator, because it helps you see the long-term power of investing into quality cash flowing assets. But before that, if you're getting value out of this video, click the like button and also subscribe to the channel by clicking the subscribe button and then the notification bell. That way you will be directly notified when I release new videos instead of relying on the algorithm to show them to you. The amount of engagement I get shows me what types of videos the audience enjoys, so I know to make more of them, and so this feedback is really valuable to me and to the channel as a whole. Okay, back to the Dividend Snowball calculator. We will start with $10,000 that you invest once and you never touch it. Then we input the annual compounded percentage increase in the stock price. I get this by measuring the first price of a share available, which is $50.38, and I input the current price, which is $105.27. When I put that in a CAGR calculator for 17 years, the result is 4.43% in annual compounded growth rate of the share price. So this is what we put in our calculator. For now, we will put 20 years, but we will play with that later. The current dividend yield is 3.19%, so we put it in the calculator as well. I will get the expected dividend growth rate using the information of the first and last annual dividend starting in 2007, since this was the first full year. And I will use the same calculator to check the compounded growth rate, which is 6.03%. We put that in the calculator as well. We turn on the dividend reinvestment plan, meaning that your dividends will be buying more shares, which buys you more dividends, thus creating the famous dividend snowball effect. And finally, since the tax rate is different for everyone, but it most likely is not realistic to leave it at 0, even though for some people in some countries this is possible, let's put it at 10%. If we do that, our $10,000 in 20 years will have quadrupled to $4,500, and we will be getting $1,666 in yearly dividends. Let's check the results on the 30th year. Our $10,000 went up 9 times to $90,000, and the dividends per year went up to $4,300, giving us yield on cost, which means the yearly dividend on our original investment of 43%. Now, let's see what happens if we invest $1,000 every month for 20 years consistently without any other starting capital and by reinvesting the dividends. In 20 years, we have $476,000 portfolio with $19,000 in yearly dividends. And if we do it for 30 years, we will have $1,236,000 portfolio with $58,000 in yearly dividends. Then finally, let's see what happens when we save or earn a little bit more and invest $2,000 monthly. At the end of the 20-year period, you will have $951,000 portfolio and $38,000 yearly in dividends. And on the 30th year, your portfolio size will grow to $2,472,000 with a huge $116,000 yearly dividend. This goes to show you what just a few extra years in the market can do to your returns and cash flow. Of course, we are all grown-ups here. If you are not, stop watching and go do your homework. And we all know that the future projections are never certain, so I don't need to tell you that the numbers will definitely be different. How different? Only God knows. So, with that in mind, are these results good or not? It's up to you to decide. I can't tell you how much money you can save and invest or how much cash flow you need to live the life of your dreams. What I can help you with, though, is to get more educated and either start your dividend investment journey, or if you already invest, to improve your knowledge. This is why I want to invite you to my free dividend investing masterclass, for which you can find the link in the description. It is a value-packed event where you will get a ton of in-depth education for free in the span of just a few hours. So go to the description where the sign-up link is, and I hope to see you there. So let me know in the comment section, what are your thoughts on VYM? Do you invest in the ETF? Are you planning to do it? And what do you think about all the things discussed in the video? I personally read and reply to every comment I get, So I really appreciate when you guys let me know your opinion, either on the video itself or on the matter discussed in it. This is just a small part of my complete guide I did on the VYM ETF. To check the full review, go to the video that should have appeared on your screen right now or to the description below.